All right. Let me see whether anyone is waiting to be admitted. No, everyone is in. Okay. All right. Welcome to NP Financial Trading Masterclass. Today, 6th of April, 2025. Interesting period. A lot of tariffs things going on. We'll see how the markets probably knew much before. We'll hear from all of you. This session will go for 2 hours. Already we are 8 minutes into the session from 3 to 5 Melbourne time. And this session, as it has been going for the last 10 years, every month, first Sunday, with all your tremendous input, we are gaining momentum and we are learning from each other so much. So we'll be in this session also, we'll be learning from each other. And I'm glad to get all those questions. We are absolutely glad to get all those questions, so many questions from all of you. We got at least, I think, 10 or 15 questions pre-class. That means that those questions are already sent to us at support@npfinancials.com.au. We'll go through it. But before we get started, we'll welcome you to read through this general financial product advice warning, especially those who are joining for the first time, like James Carr and others. And NP Financials advises all service recipients of the following. This information is only provided on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials should be considered as this financial trading recommendation. I'll give you 15 more seconds to go through and let me know when you are done.
I'm done.
Fantastic. Brilliant. Excellent. So today it will be between me and Marty, and of course Kerry obviously will come in to answer the questions. So the first questions I'll be taking from I think I'll be taking from Andrew. He has asked interesting questions. His questions are in front of you. All right. So looking forward to the master. Okay, very good. Foundational stuff. I know. Okay, that's fine. What do you do with trend line on your chart once it is broken? Everyone can hear me and see my screen?
Yes, sir.
Yes,
So
we can.
so the first question is, what do you do with trend line on your chart once it is broken? Is it deleted straight away? Ultimately, my question is, what are the most important drawings to retain on our charts? And his observations is, my charts are getting so cluttered with drawings, it's very noisy. Related to this, so this is the second question. So I'll first stuck on to the first question and then go to the second one regarding PRT and then go to the next one. So, all right. So your chart should not be any time clumsy or very busy. So how to not to allow that? So let me bring one chart in front of you. So that someone was trying to join, Andrew Linnett. Good afternoon, Andrew. How are you? So we have two Andrew Linnett and Andrew Stapleton. All right. So I have just started, Andrew. You have not missed anything. I'm taking the first question. So it will be today. It will be between me and Marty. I will be missing Kerry, but we learn from each other as we have been doing. So trend line and the busyness of the chart. So let's go to a chart. For example, let's go to GBP AUD. Or currency pairs. You can go to Andrew Stapleton. Do you have any specific pair for me to discuss, or I can discuss anything and everything?
Happy for you to discuss anything. Just spend a lot of time on anything that's USD based at the moment.
Oh yeah,
so maybe even DX or USD JPY would be fine.
Brilliant. So we'll go to dollar index. We'll go to dollar index, and any time frame you have in mind?
Daily. It's fine.
Oh, daily. Fantastic. Brilliant. So this is dollar index in front of you, DX. If you write DX, dollar, and index, X for index, then with the IG, it will be known as US dollar basket. We use a itfinance.com real-time chart. Those of you who are new, we'll introduce you to this chart. Don't worry. So US dollar basket or index is a basket of 6 currency pairs. and they are euro, sterling, yen, Canadian dollar, and then Swedish krona and Swiss franc. These are the 6 currency pairs which made up this monthly chart. So what we do draw the lines from the yearly and then quarterly and then monthly, and these are the lines which are coming from, as you can see, this is from yearly, as you can see in front of you. This line is coming from monthly, as you can see in front of you, and this line is again coming from yearly. Because price is below the line, so the line should be resistance, and we denote the line as red color. Any red color is resistance, any green or blue color is support. So it can be from quarterly, as you can see, or it come from monthly, and so on and so forth. It can be from monthly or yearly. So now he's asking for trend line. Forget about the business. I'll show you. I'll come to that one daily chart. For the time being, what we're doing, we are selecting the last price is here, 10,263. Some broker also denotes you as 102.63, depending on the unit they are choosing. You may stop me at any time and ask question. Don't you know me that. So this is the last swing high, swing low, and this is the previous one. We'll join this trend line, and then because there is a swing high in between and it has been taken out, so this is a confirmed trend line. This is not a tentative trend line. So this is a confirmed trend line. Some people prefer to draw this also from swing low to swing low just to see. Although this is not encouraging, but it is not bad because the price may come and stop here. So I'll do that, and I also do this, but it is not so much meaningful. We need to draw. If you are not doing it, that's fine. If you are not drawing this line, that is fine. I can delete also. So I can delete this. If you are getting confused, I'll just delete it. So what we are looking for? We are looking for a swing low which is higher than the first swing low. And in between these two swing lows, we must have one swing high minimum. And if that swing high is taken out, that is a confirmed trend line. And that taken out means price has gone above this. Price has gone above this. So this is in monthly. And then I'll go to the weekly. And weekly price is here. Same 10,263 because market is closed now. So what we'll do, we'll identify this last swing high and when to go to a previous swing high, which is this one, previous swing high, and join them. We prefer red line because of resistance, provided there is a swing low in between, this one. And same thing we can draw from here to here because there is a swing low in between. So there are two lines. And for swing high low, there is no swing low formed. Anyone speaking? Okay, so then we'll draw this swing low to swing low, and the magic will be formed here when we are drawing this swing low to swing low. This is also swing low to swing low in between swing high, and this is also swing low to swing low. And can I join this swing? Can I join this trend line? Anyone? 0.1 to 0.2. Is it a valid trend line, or should I delete? Tell me. Please unmute and talk.
It's not valid.
Fantastic. Brilliant, Anil. That is a good question. Can you tell me why it is not valid?
There is no swing high in between.
Brilliant. So this is a swing. Anil got 100 out of 100. Anil is new to us. That is good. He has remembered. So this 0.1 and 0.2 are swing low. 0.2 is also higher than 0.1. That is also good. But in between these two swing lows, there is no swing high. So it is an invalid trend line. At NP Financials, we do not draw an invalid trend line. We'll delete that. So this is first thing you need to do that. Andrew, if you are by mistake doing it, I know you will not be doing it because Andrew is like many of you, like Andrew Stapleton and Ben Perkins, many of you have done so much of practice task. I have strong belief in within myself that you cannot do these mistakes of drawing an invalid trend line. Why it is a mistake? Because market participants will not honor, respect your invalid trend lines. That is why we do not draw invalid trend lines. Because now we are talking about trend lines. There are 4 kinds of trend lines. Invalid trend lines, number 1, must not be drawn. Valid trend line must be drawn, and valid trend lines are of 2 types, tentative and confirm. You already know that. All right, so these are the only 3 lines we have. And what I'll do, I'll just make sure that you are selecting this inferior time frames. What does it mean? display in inferior time frame. If you are selecting this and saving that, I have so many saved segments there. That means what inferior time frame means, it will appear in our daily also. So let's go and see what is the daily showing. So let's see that. So in the daily, this is the line which has been coming from weekly. As you can see, we have drawn this weekly trend lines, and that trend line has told us around this point, that trend line has already told us that the price is breaking the trend line with a rule of 4. Those of you who are already trained in our proprietary rule of 4 know that if the price is touching the line closing below, preferably a bearish bar and low taken out, then there is our rule of 4 to get triggers, and there is a probability that price will go down. This is the $1 million concept to know whether the price is going to go down or go up. You already know that. And if I am moving fast, please stop me. And then you can ask questions. So this has been done with the rule of 4. This has to be taken out by 30 points. And of course, price can go and retest this line. Price can go up and retest this line. Let's see what happens. So price went down and got a support at this point, which is monthly support. That's fine. Our strength is bar by bar at NP Financial. So we go bar by bar because every bar unfolds, it presents a new bar every day. So market unfolds bar by bar, day by day. So let's see. It is going to retest this. Let's see. Yeah, it got a retest here. It got a solid rejection. It got a retest here and a solid rejection. Again, we'll apply the rule of 4 there. So we have applied the rule of 4 and we'll apply again rule of 4. And this is having higher probability to go down because of the rejection. Look at this rejection here. Let's see. This gap is, if you have noticed, between this close and open, which immediately got filled in, this gap, open and close, this gap is possibly a false breakout or possibly an exhaustion. I would say false breakout. Then we have a rule of 4. When this low is taken out, then we will go short. So from this date onwards, whether with tariff or without tariff, almost 2 months back, because market knows much in advance. We don't have to listen to any news whatsoever, CNBC, CNN, Bloomberg, all the gurus. We don't have to listen to anyone, but we need to listen to the market and follow our rule. So our rule of 4 says that we need to go short, and let's see, market should go short from now. Let's see, with a probability. Of course, a probability must be attached. So in between, we have one swing high, in between swing low, we have joined this. And when this swing low is taken out, we'll have the confirmed trend line. Let's see what happens. Boom, 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 boom. So this is a break of this monthly line. Again, retest here. Again, retest. That retest is a very common phenomenon. Although I would believe 60% it is not retested, 40% it is retested. We are lucky that it is retested here. We are lucky that it is retested here. But for 60% it will not be retested. It will just go boom down. All right, let's see. Or boom up. Go down, 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 down. Retest, again retest, and we are continuously joining the trend line and retest. So to answer your question, my dear friend Andrew, and all of you, we would not delete the trend line immediately. So one of your question is, would we delete the trend line immediately? No. Once it is broken, not really. We do not delete the trend line because we know that 40%. If we had deleted this trend line here, then our retesting function there is not we don't know why it is getting rejected from here, because the trend line we are deleted. So don't delete the trend line. You can delete this trend line, my dear friend, when you are here. When you are here and there is no opportunity, of course price can go, but there is very less opportunity price to go and hit at this point, which is almost boom, 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 11,300. 11,300 going from 10,263 is a big run, right? So if you believe that is the case now, then we can delete. Then we can delete this line. Then we can delete. But immediately don't delete. Do not delete immediately trend line. 2 or 3 things are extremely dynamic, and many of the things are extremely static in trading. So this is the static and dynamic nature of market. So what are the things which are static? The pivot points are static. The horizontal lines are static, which are coming from yearly, quarterly, and monthly. These are static. What are the dynamic lines we draw or we hire from the previous inventor? I think nothing is invented, everything is derived. But anyway, so the dynamic ones are, trend line is a very dynamic one. Fibonacci, those of you who are trying now Fibonacci, who are doing the practice task on Fibonacci, especially Andrew Linnet and others are doing Fibonacci. Fibonacci is a very dynamic tool. Trend line is a very dynamic tool. So a couple of things are very dynamic, like Bollinger Band, if you are using, which was invented in by John Bollinger in 1980, that is also dynamic. But for the time being, we are concentrating on trend line because the question is on trend line.
Hey,
So
Partha,
now,
I've got a question for you.
go.
Partha, in this trend line, when it is break, what time or which bar we take a trade, like a short trade, as soon as it breaks the first bar on 20th of 20th January, or because it retraced too much. There's a this one. In this one, we take a short trade, or if we need to take a trade.
All right, that's a good question. So that is probably coming from Akshay, and
Yes.
Akshay has completed intraday trading, and he's trying FTMO, the prop trading firm challenges. But also Akshay is doing the forex trading, but I think he is in module 1, unit 1 of Trader Foundation. All right. So to answer Akshay's question here, so we would be trading as per according to this. Okay, we have two. Very good question. We have two approach to our development program or system. We are developing traders from 2010 or 13, I believe. And in that development, we have two kind of concept. One is the Trader Foundation. That is why Andrew, who are trained by us, he has already written foundational stuff. I know ... It means a lot. It means a lot. So we call it Trader Foundation. So Trader Foundation, where Akshay has just started module 1, unit 1 of Trader Foundation. We have 3 modules and many units. As you can see in Trader Foundation, we have 3 modules and many units. And Fibonacci is discussed in module 3, unit 2, which Andrew Linnet is doing. So after this so we have 2 things. One is the foundation, and then the beginners, advanced, and professionals. So so we follow both. We follow the foundation as well as beginners, advanced, professionals if you are doing forex, or we do foundation under commodity, we do foundation under share trading, and also we do foundation under indices trading, or we do foundation in the crypto trading or intraday trading or Elliott wave or market mapping. So we do foundation in all of them, mapping of markets, Elliott wave. So we do foundation all of them. So to answer your question, foundationally you will be taking a trade when you are completed module 3, unit 2. Then you are supposed to take a trade here with a rule of 4, with a stop loss here, with a stop loss here. So now you are saying it has retraced a lot. Don't worry. When we are taking a trade in this minus 30 pips, so the low is 759 minus 30 is 729. So when you are entering at around 729, supposing your 1% risk is here at this point, 251 points is our 1% risk. Kerry has asked me brilliant questions, which I'll cover later on risk. So our stop loss is here. So 1% of risk, we never allow more than 1%. Now this one is only 0.7%. That can happen. Obviously, that can happen. So we may be losing for the time being 0.74%. And here we are winning. Don't forget, here we are winning some 0.4% also. 0.4%. So when we are winning 0.4%, don't be ecstatic. I don't know what is the English. Don't be very happy, but English is my second language, with due respect. And then this is this loss of 0.7%. Don't be very sad. Don't be very sad. If you are sad or happy, please ask Kerry, and she can definitely help you with our happiness or sadness, how to deal with this, how to go from our this brain to this brain. Kerry is really brilliant. She is not because she is brilliant, because she is brilliant. That is why she is brilliant. So we can take help of Kerry. So I leave the psychological part to Kerry. But when you commented that it has retraced so much, so what? It can retrace up to this. We don't care. It can retrace up to this. We don't care. We only care whether we are stopped out or we made money. That is what we care. So first of all, from
basically, I wanted to ask whether we should wait for the retrace or we should take the
never wait for the retrace. Never wait for the retrace, because 40% it will retrace, 60% it will not retrace. If it is not retracing, then you miss 60% of the time. Yeah. And don't get panic here because you are not stopped out. So foundation, you should enter here to answer your question, and otherwise you should enter according to our strategy. If I keep the strategy side by side, our strategy will tell you to enter here, and which actually will possibly the same point here, I believe. Same point. If I keep the cursor here with the red histogram, we'll be entering exactly on that. So in this case, foundation and strategy are all matching, so we can enter there. And again, there are so many opportunities, hook entries. These are hook entries to enter. When we'll be talking to beginners with you, you'll be learning. But for the time being, you'd be entering here on the foundation and anywhere here if this strategy is telling you. So now coming back to the question. Go.
I have a quick question. Where do you put this stop loss? You putting at the Shanghai or highest bar, second highest bar?
See, yeah, this one. But if you are doing on a if we are going short on a foundation course, you prefer to go here. But if we are going for a this thing strategy wise, if we may go to the second higher high and then 20 pips on that. In that possibility, you will be taken out here.
Yeah.
And again, you enter here. Again, you'll enter here. Okay.
Yeah.
Very good. Thank you, Dhanuka. Thank you, Akshay, for asking those questions. But I'll concentrate on question which I'm discussing, Andrews. So this is how we'll keep the trend line. Now I'll be deleting this one because it is of no meaning. And then I may delete this one also. Because it, otherwise maybe my chart is too busy. But I don't think in 50 units or whatever units you prefer, 25 or 88, if 8 is your favorite number, if you prefer those numbers, for example 88, if I do 88 of this, it is not very busy. It's not very busy. Is this chart busy, Andrew?
No, that looks okay.
So did I answer your question on the trend line, Andrew?
You did, but is there a couple other?
Yeah, I'll go to that.
Oh, okay.
But I have one more question.
Yeah, go.
With these support levels, is there any way that you can like put like an overlay and then hide it when you want to know?
Oh, sorry, OLA. What is OLO?
No, like an overlay where you can hide when you need to, like these support levels. Some charts I have a lot. These are quarterly, yearly ones, and so many lines. Sometimes, I like my brain gets screwed.
Unfortunately, unfortunately, these lines must be there. Few lines must be there.
Lines are there. But there's a function there you can hide, but it hides the lines.
Yeah.
Then it hides everything, but that's a problem.
Okay, now I understand your question. What Dhanuka is saying that there is a functionality which I think was the third part of the last part of the first question of Andrew. That is a display object, capital O. Display objects. If you click here, right click on the chart, Andrew. This is the last part of the first question. Display objects. If you click display objects, everything is gone. Everything is gone, but don't do that. So don't do that. These lines must be there because price is like water. It will just flow in the direction of the least resistance or least support. So this support resistance line must be there. Must be there. Yeah. Because price will only flow between the support and resistance. So let's see what is the second part of the questions. Yeah, trend line is deleted. No. Ultimately, what are the most important drawings to retain on your charts? The most important lines to retain in your chart are the horizontal and the diagonal lines and the Fibonacci. These three lines must be there. Pivot points may not be there. Bollinger Band may not be there. Trend lines may not be, moving averages may not be there. But these three lines from the foundation course, the horizontal support resistance line, the diagonal support resistance line, trend lines, and the Fibonacci must be there. My charts show if in front of you, I think I have answered this question. There is no way in PRT where you can see daily chart template with drawings on it while simultaneously looking at a naked chart of the same. No, you cannot. Yeah, because if I do this, so for example, if I'm doing this, let's say to demonstrate that I'm doing this here, one chart, and I've duplicated another chart here, duplicated another chart there. Okay, so now we have two lines there, two charts. Let's make this as dx as well, link this so that it will be dx. All right, so if I do here right click an object, let's see, I have not tried this side by side. Let's see, I am doing this object to make it naked or bare chart and display. Woo, this has taken this also. So there is no way, sorry Andrew, there is no way in PRT. Okay, so you cannot do that. So these many lines should be there, and it should not be very busy. It should not be very busy. I don't think it is busy. If it is busy, if you have allotted only this much of space, for this, what you do, you reduce the unit. That is another way to get uncluttered. So reduce the units to 25. Then you are definitely not cluttered. Is it cluttered, my dear friend Andrew?
Yes. Yeah. Thanks for that, Partha. Appreciate it.
Yeah. So reduce depending on this, supposing this is your size, of the chart, reduce it to 50. But supposing you have 8 screens, then you can increase this to 88 even. So it is not cluttered. But if it is cluttered, reduce the chart to 25. And then even if your size is this much, it is not cluttered. Make sense? All right. Anyone having any go?
I just said yes. Thank you, Partha.
Okay, fantastic, brilliant. All right, I'll go to the next part. So this first question is I answered totally. Andrew?
Yes. Yeah, you did. Thank you, Partha.
I'll go to the second one. Are we seeing a head and shoulder pattern on the weekly chart of APL Apple? I see 2 potential head and shoulder patterns, and if you draw this head and shoulder pattern in this class, can you please show how you use the ruler tool with the mirror lines to get a precise measurement of the targets? Excellent question. Neckline between 5th August and 27th of January. This one I know because I have drawn this. Yeah, this one seems to be still in play now. It is not probably. I think Andrew has written. Yeah, it has hit all our targets, which is so good. Neckline between swing low 4th. Okay, let's go to let me keep this one here so that I can refer to his dates. Apple. Now we are discussing Apple shares. So he's talking about, let me delete these lines. This is a right. This is a what we have tried to do here. What we have tried to do here. Anyone who? What are these 2 lines? 1, 2 lines, and what is this measurement? Anyone?
For the bearish flag.
Oh yeah, that was the 5 months old. Is it, Andrew?
Yeah, that's right. Yep.
I got it right. That is fine. This is fantastic. This is brilliant. Thank you, Andrew. So this is a rising wedge or a bearish flag. Rising wedge in a downtrend. Rising wedge, WEDGE. Rising wedge or bearish flag, as Andrew said, in a downtrend is a continuation. And how do you continue? You measure the flag. You can measure the flag. You can measure the distance of the flag either vertically. That means you do it vertically this way, or you can actually do this to make it a real flag, and then copy from the top. It will be easier for you to place. Copy from the top and then place it here. So this is your first target after the break of the line, and then again copy this target and place it here. This is the second target, and boom, you got the second target. Brilliant, fantastic, Andrew. That's good to remember. All right, now let's go to the head and shoulder. All right. So head and shoulder dates were, according to Andrew, the dates were, okay, I got it. Weekly. First of all, I need to go to weekly because he's asking weekly. And the dates are 5th neckline between swing low 5th of August to swing low 27th of January. So then let's draw this. 5th of August is this one. The 26th of 7th of January is this one. So this is number 1 neckline. And the number 2 neckline you have drawn is, okay, those of you who are following, this is the head and shoulder. This is the head, my dear friend, like us, human being. And this is the right shoulder, like we have, human being. And this can be the left shoulder, as we have, or this can be the left shoulder. That is the question Andrew is asking, right, Andrew?
Yes, correct. There's just another swing.
Yeah, another line, which is 4th of November to 27th of January. 4th of November to 27th of January. I think this one to this one. 4th of November to 27th of January. Okay, what did I do? I did a mistake. 4th of November swing low to this swing low. Okay. So let me change the color so that we have two. So let me make this blue. Let me make this blue and dark. And let me make this blue. So for this swing low, for this left hand shoulder. So this is interesting, very interesting question. Good question. So we have a head, we have a left shoulder, and we have a right shoulder this one and left shoulder this one. We generally prefer to go to the nearest swing high to make this left shoulder. What was that? Bitcoin. Oh my God, Bitcoin is still running. Okay, that's good. All right. So we generally prefer at NP Financials to go to the nearest swing low. So this is nearest swing high. This is a swing high. This is a swing high. So we may go to the first swing high. Let me hide the this section first to get a clear picture, and let me also hide this one, the result. We are not seeing the result yet. Okay, so now we are here. Now we are here. We saw a head, the highest point, highest swing high, and then we see left shoulder, the previous higher swing high, which is lower than the head, and right shoulder to the right hand side, which is lower than the head. So now our job is to identify swing low between head and left shoulder. This is the swing low. Those of you who are practicing swing low is something which is lower than this one and lower than that one. So swing low is that one. So this is a swing low, this is a swing low, and in between head and right shoulder we must have a swing low. So our job is to join this. I'm doing it in blue. That is what it is, the blue color, and this is known as neckline. So this is known as neckline. So let me write the English. Neckline. Very good. Excellent. Fantastic. Brilliant. I can do a little bit of drama with this. Okay. Neckline. All right. Then our next job is to draw vertical segment from this to this, from the head to the neckline. This is the measurement one. This is the measurement one. And copy this and paste it here when it is broken. Copy this and paste it here, which I'll draw. So this is the first one which Andrew has done. But this is a negatively sloped neckline because it is pointing down. If you measure with a tool called object advanced line, and then line by angle, object advanced lines and line by angle, and if you go from first point to the second point, it will tell you the angle -1 degree. -1 degree. So that is minus. Anyway, negative. This is negatively sloped. We do negatively sloped. That is no problem with the negatively sloped. Now we go to the previous. Because it is a negatively sloped, we may go to the previous one to make it a positively sloped. So for that, what we saw, because the left hand side is always known, right hand side is not known. That is why I have fixed the right hand side. So the left hand side is always known. We can take advantage of the left hand side anytime. So now we'll be drawing from this head to this left shoulder. Sorry. And between this in green, we have one swing low, another swing low, and this is the neckline. In green, I'll make it this as a neckline. All of you are with me. Those of you who are practice head and shoulder, are you with me? Any questions? Those of you are with practicing head and shoulder. This is a fantastic way to learn. For 2 hours, we get to listen to all of you. It is so good. All right. So this neckline, green neckline is from this left shoulder, this which is a positively slope, Again, you go to the line, you'll see that this is a positive, as you can see from the line itself, positively sloped. So for this positively sloped, we'll have another one, which is we'll do from here, head to the neckline, and I'll do that. Okay, let me first do this one in blue, because that was blue. And let me copy this first and paste it here. Whenever it breaks, then bring this line and green from here, from this head to the new line, and copy this line, paste it whenever it fits, okay, let me not fix it now because it will overlay. All right. So now Andrew's question is, the one seems to be still in play and neckline is currently being retested. This neckline would have just been broken, so I believe no longer in play. Let's see. So this is the 4th to 27th is broken. So let's see the how market is unfolding. Ding, broken. Yeah, this is the broken. So we are entering here. We are entering here to make money. Short. We are entering 1 pip below. This. Okay. So we are entering here. Okay. Let's see. Ding, ding, retest. This is a retest. Yeah, this is a retest. But 40% of the time you will not get retest. But retest to the this green neckline, not the blue one. Okay. Now this is second. What is that? Bitcoin. Okay. So he's asking a question on 2nd of April. So let's do that. Go to 2nd. Boom, 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 boom. So now our first target is here. Andrew, to answer your question, both the head and shoulder are in action. Nothing is broken, because the most important point of the head and shoulder, don't forget, I think you have forgotten this one. If I'm wrong, correct me. The most important point here is the line to the head to the right shoulder. This line must not be broken, my dear friend. Not this line. This line can be broken. So the neckline can be broken. That is fine. But this line must not be broken. If the line joining from the head to the right shoulder is broken, then you have to delete all the entire structure of the head and shoulder. But this neckline can be broken and it can go up to here. No, don't worry. If you worry, talk to Kerry. So don't worry, be happy. So this break is not a break at all, because this has to break this line. And our first target is this one. And our second target is copy the green line and paste it here. Have I pasted properly? No, it has to be perfect. Yeah, and our green head and shoulder target here, which will be possibly met in next week. And this is a big profitable trade, because we have taken a target of 4,572 points. Those of you who are trading standard lot, that will be $45,000 in your pocket. Those of you who are trading $1 a point, that is $4,572 in your pocket. Did I answer your question, Andrew?
Yes, you did. One other question, though. I think in a video years back, I saw you use the ruler tool with a mirror line that allowed you to like measure it precisely and show exactly where the target was.
Yeah, I forgot that question. Ruler line. Okay, so for the ruler line, you need to go here and then copy from here to here. So that is 4,000. No, first I'll go to the blue one. So that will be 4,102, and copy configure the ruler, and then mirror line. Ding, 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 ding. Mirror line, and then display gaps and display dates and price, and display y-axis. Okay. So, and main line, where is the first horizontal line? Horizontal line extension, main line extension. No, main line extension not required. Vertical line extension not required. Second horizontal line extension correct, required. Second vertical line extension. Vertical line extension is not required. Mirror line extension is required. And let's make this color all in this so that we can make. Okay, let 0.1, 0.2, and the mirror line. Okay. I think you got the trouble because the mirror line went up, Andrew. If the mirror line is going up, it should come bottom. Yeah, if the mirror line is going up, is there an opportunity to do the? No, there is no way. I think there is a way. Let me try first.
Do you just? I think do you just draw it from the bottom to the top?
Top to the bottom. I think that is the mistake, isn't it? Let's do again other way around. Let's do from the top to the bottom. And let's do the configure mirror line, horizontal mirror line, and then this one. No, it is going to the top. Let's
think
make
you might
this.
draw bottom to top.
Yeah,
Point
that's what.
yeah,
That's
yeah.
what. Let me do it now. Add. So I've added this. Now go to the bottom to the. Oh, my dear friend, what did I do? Add indicator, see all indicator, price, add, and delete this divergence for the time. Okay, so let me draw the other one from the top to the bottom, from here to here. And again, the mirror line is going to the top. Oh, it is going to the top, my dear friend. Okay, let me do diagonally. Let me do a little bit of, let me try to get what we are looking for. Okay, let me go to the mirror and draw diagonally from here to here. Configure. Let me bring the mirror. Yeah, mirror. No, it is going from that. Okay, even if I'm drawing diagonally, it is going there. But if I do diagonally here and mirror, it is going to the top. My dear friend, it is not going coming to the bottom. I don't know why. Anyone can throw any light? Why it is
I think
always
what Andrew says is start from bottom to the top. Try
yeah,
that.
I did that. I did that.
Goes up, yeah.
I did that.
Maybe try one more time.
Okay, okay, that's it. Maybe. I'm a human being. I can do thousands of mistakes. I'm allowed, isn't it? Okay, let's do go this one and then from bottom. This is the bottom, right?
Yeah.
Bottom to the top. Okay. And then extend everything. Configure mirror line.
There we go.
Second. Oh yeah, you're right. Yeah, that's it. Yeah, this is how you see. You answered your own question. Danuka, thank you.
So when you do the asset
Sorry.
class evaluations that you post in on the site and everything, is this the tool that you use to get such a precise number?
Yeah, exactly correct.
Okay. Yeah.
Yeah. Ruler is the most precise tool instead of vertical segment. Ruler is the most precise tool to get it. So yeah, that's good. Did I answer your question?
Yeah. Thank you, Partha.
Okay, brilliant. So we have answered. Anyone having any questions on top of Andrew's question? Silence means no one. All right, that's good. So I'll go to the next question, which has been asked by Tyron. You may ask any question. Don't hesitate to ask any question only because we are asking the previously asked question. We are only responding to previously. I don't think that we are responding to previously asked questions. You can ask any question. You can ask what is the red bar? What is the green bar? Don't worry. Don't ask. Please ask. Do not suffer in silence. Following is my question for the upcoming master. What strategy can you suggest to identify the probable direction of DS? Again, DS, love it. For the day and at 10 a.m. or 3 p.m. 10 a.m., 3 p.m. That means 4 hourly. 4 hourly and daily. Are you asking both, Tyron, or you are only asking daily? Tyron.
I'm asking daily, but our day starts on the English time frame at 10 o'clock. The new bar starts at 10 o'clock, and the American time frame it starts at 3 p.m.
Yeah. So we'll go
So,
to
so I'm wondering whether we should uh, do the strategy at 10 a.m. or 3 p.m.
that's a very interesting question.
Because DX has been going up and down all the time. During the day, it's moving all over the place.
All right, let me see what DX. I think we have started with DX. Again, go to the DX because everything is so much happening. Dollar index is very important thanks to Trump. All right. Now, so as Tyron, everyone understood Tyron's question, what he's asking? If not, then also, so let me show you. Let me show you. Delete this one. Any unnecessary things you must delete, Andrew and all. Everyone must delete the unnecessary ones. Only keep the diagonal and the horizontal. That's it. That's it. That's it. You must delete all the other ones. All right. So what Tyron is asking is, what time frame should we select? How do I, first of all, the previous question should be, how do I select the time frame? Let's go to the I, information. I is the key here, information. And then go to the trading hours. See how Tyron is saying 10 to 7. That's what we do. And why 7, my dear friend? Because 7 to 10 is the reconciliation. Those of you who have started now, like Anil has crossed, I think, that stage. Like Sumit, like Akshay. In module 1, unit 1 of basics of trading, we discussed timing. Everything what we discussed in our modules and units are extremely important. It is so important. I can't stress more. The module 1, unit 1 of basics of trading, right from the beginning of module basics of trading, right from the beginning of basics of trading, module 1, unit 1, in which we discussed about timing, if I'm not wrong. Yeah. See, on the module 1 itself, on the first day, when you enroll with us, we'll talk about many things. And on top of that, in module 1, unit 1 of basics of trading, in page number 6, because the previous is 5, next is 6, 7. So this is 6. Page number 6, we discuss the time. And we say there is a gap of 2 hours, 22 GMT to 24 GMT. Gap of 2 hours because of reconciliation. That exactly what you are seeing here. Market does nothing. Where is my eye gone? Yeah. So 7 to 10 is the reconciliation. Nothing has been done there. So if you are in Australia, my dear friend, you need to so let's click on this 10 to 7. So it gives us all the opportunity. It gives us all the opportunity. And it says display all data in the time zone set on my computer. For this session, UTC plus 10. That means universal time, which is the GMT, Greenwich Mean Time, plus 10, which is the Sydney. Now, from today or tomorrow, I think after 1 week, it will be GMT plus 9, I believe. Anyway, because America has changed to daylight saving off. We have today changed to daylight saving off, and we are waiting for London or Britain to change. Then we'll be opening at 9 o'clock. Tyron, it should not be on 10 o'clock, it should be 9 o'clock. Anyway, so you have the option to select this one, which we do, or you have the option to select this one also. Display all data in the time zone. You may select whatever you like. US Eastern Time, what is 3 o'clock in the afternoon. That's what Tyron is suggesting. But for the last 16 years, we have not done this because we are in Australia. We always know, we always have kept this as Australian opening time. So that's what we do. No need to change it to America because we are not in America. So no need to go to change the 3 p.m. So that is the last part of your question. And the first part to your question is, what strategy you can suggest to identify the probable direction of that? Is very simple question. The strategy which we'll be discussing to know the trend is the Trader Foundation, starting from module 2, unit 1, module 2, unit 2, and module 3, unit 1, and module 3, unit 2. So the starting from module 2, unit 1, we'll be knowing the foundation, and the rules say, and the rules tells us that in single chart we need to see We need to see the swing high, swing low. We need to see the peaks and troughs. We need to see the P star and T star. In a downtrend, don't forget the foundational topic which we discussed. In a downtrend, never ever forget that the P star, or the swing high star, P star or the swing high star must not be broken. So this is a P star, not broken. This is a P star, not broken. This is a swing high star, not broken. I'll correct that later on. Okay, let me correct now. Swing high star, not broken. This is a P star, not broken. So in a downtrend, as you know already, the P stars or the peak or the swing high star will not be broken. If you see the peaks or peak star, peak or the swing high star are not getting broken, then it is a downtrend. In a downtrend, what will happen? The T trough or the swing low star will be broken. So this will be only T, make it capital. So this will be broken. This T is broken here. This T is broken there. This swing low is broken there. This swing low is broken there. So that is extremely simple to know the trend here, because the peaks and drops are coming down and the P star is not broken. So in chart in front of us for dollar index, because you have asked me to do the dollar index, so this is a downtrend. But for the time being, in a daily chart, it is possibly doing a little bit of crack and snap back with an exhaustion gap. So did I answer your question, Tyron?
Yes.
Anyone having any other
Thank you.
question?
No, that's all right. But I thought that because DX is moving so often during the day,
We don't care.
and
We only
every
see at the bottom. We only see at the opening. We only see at the opening of the market. We don't bother what intraday is doing. Intraday, if you are doing intraday trading, then you bother. Then you bother about intraday trading. So if you are trading intraday in our learn to trade, we have intraday. If you are trading intraday, then you need to bother about the market movements during the day. But since we are doing end of day, of course you can do intraday as Akshay is doing. Akshay, would you like to share your experience on the intraday, mate?
Yeah, Partha, I'm still practicing my 3 months, but the strategy is pretty good. I've been practicing a lot. I'm getting over 80% the achievement in this. So the things which you told me about the start of the market, when the volume is very high, I only trade on that time, and it's pretty cool.
Fantastic. It's so good. This keeps us moving. Akshay is so good. Akshay, thank you so very much for your kind words. And these kind words may moves us, like Girija has said here, like Andrew has said here in the Google review. We just have shown everything here. What Tyrone has said, what Gautam has said, what Dhanuka is saying, and the list is endless. Shreya has said, Mihir has said, so on and so forth. What just now Andrew said, is 80% success from our strategy, which is so good. It is so good. It is so good to know that whatever we have been trying to do is working for you, and we are so glad. And we all, our strong belief that with these strategies, if you practice, you will definitely in near future you'll be trading $1 million in your FTMO account. We also provided $1 million in our professional account. If you go back, if you do remember our professional account audition of $1 million, we also offered from 2019 to 2024. After that, we had to stop because no one in Australia probably can do it because of regulatory changes. But we also, but outside Australia, many countries allowing like FTMO and other. Shreya, are you there in the call? Shreya is not there. Shreya was talking about Maven prop trading, and in which I think I'm writing it prop form. Yeah, prop form. Yeah. This Maven is I don't know. This I think Maven. I think MAVEN. It's a new entry, but they are actually giving all the commodities. Those of you who are doing commodity trading with us actually can take advantage of the commodity trading, and they are giving a lot of commodities. They are taking a lot of commodities opportunities. Yeah, it's there in their this all these things, fees and commissions and all those things. What instruments can I trade? Yeah, see, aluminium, Brent oil, cocoa, coffee, copper, corn, cotton, natural gas, soybean, sugar, wheat, WTI, oil, silver, gold, palladium, I believe, zinc, platinum. So there's many commodities. Thanks to Shreya. Shreya told us this. Those of you who are concentrating on commodities can actually go with them, but we generally go with FTMO. That's good. Thank you so very much. Really appreciate Akshay for your this thing. Fantastic, brilliant, excellent. All right. Now I go to Kerry's question. Kerry has suggested some very good questions. Let's take Kerry's question. What percentage of I never mind. I always say ask questions and do not suffer in silence. Well, you can ask any question to anyone. This is an open forum. Always ask questions. And what first questions, Kerry's first question. I'll take another 25-30 minutes and then hand it over to Marty. What percentage of capital do you teach as a risk capital for all open trades? Anyone, including in Girija, Vijayata, or anyone can tell Kerry what percentage we recommend?
1%.
1%.
0.35.
0.35. That's it. Who said 1? Ben, is it? Anyway, so someone.
No, wasn't me, Partha.
Okay, Tyler. Yeah, 1%, 0.35. Who said 0.35?
Akshay, that's what you told me to do that.
So, Kerry, you got your answer. Although in the book we said 1% in our modules and units, we say 1% in our. I think that is what this Sumit is doing now. Tether Foundation Module 1, Unit 1. And in the small discussion we had, and we always prefer to have 1%. So, for example, ding, 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 the ding, ding, the ding, ding. Account risk, this one, Kerry. Module 1, Unit 1 of Tether Foundation, we strongly recommend, repeat, strongly recommend in bold, highlight, underline, capital. 1% or less. That is why you got 1% from Tyron and 0.35 per Akshay. Why? They never ever put a loss more than 1%. Akshay was telling me the fact. Akshay, would you like to repeat the fact? What your friend, how who is not a student of us, how he lost 150,000 in one trade? Akshay, please.
Oh yes, I think he does the option trading. He had no experience, and one of his clients does the option trading. I told him don't do that, and he never listened to me. I think he bought a call, or he did a naked call or naked put. I can't remember, but he lost $150,000 in one night. He wake up in the morning, his account is gone.
So he was having 300,000, isn't it?
Yeah. He said he saved 150, but I doubt it the way he was saying.
Anyone wants to? Thank you so much, Akshay. Anyone wants to share any experience or observation from any of your friends or from your own experience on this risk?
Yeah, I done the same thing many years ago.
You did, isn't it? All of us most probably did, but this fellow did it a lot of 50%. Oh my! Go.
I owed JP Morgan Stanley Bank $5,000, so I lost my whole account. Plus, I owed them.
Oh my God, this is from Marty. Thank you, Marty, for sharing. So, oh my God. So, to answer Kerry's question, we never allow anyone, of course, we cannot force you, but we never allow anywhere in writing or in verbal to take more than 1% risk. Although we encourage people to take less than 1%, that is 0.5, 0.35, 0.3. So because why Akshay said 0.35? Because first of all, he was doing intraday and he's doing FTMO audition. So why 0.3? Because we have a belief that if you do 0.3%, and if your net win, which is for last 8 years, we have been demonstrating this. We have been demonstrating this through our trade ideas and trade outcome. Net win is 0.3% only. 0.3% if you are if you are winning 0.3% only, 0.3% of your net. So that means in 20 days in a month, you will be winning 20 multiplied by 7.3 is 6.6. 6.6% you win in a month. So let's forget about that. 6%, and the passing is only 10%. So profit target is only 10%, because 100,000 is 10% of 1 million. So he will pass the audition in 2 months. So why to worry and take 50% risk and blow your account? Unbelievable. So never ever take that. So to answer this question, 1% is maximum, but we encourage people to take less than 1%. Did I answer your first question, Kerry?
I was actually kind of, yes, but is that across all trades? So if you had like 5 trades,
Fantastic.
is that 1% across everything, or is that just one, say 0.5 or 1% on each trade?
Brilliant question. So Kerry is asking about portfolio risk as well as the account risk. Supposing a portfolio risk, I don't know which page we have spoken, so that is not important. So we have 2 risks. One is portfolio risk and the other one is trade risk. Trade risk is for individual trade, and portfolio risk is how much risk you can take and go to bed and sleep. So probably with the introduction of prop trading firms, you can take risk of 5% and then or 2% or 3% and go to bed and sleep. So my recommendation would be, so the portfolio risk, if you have so many trades, 5 trades, 8 trades, 10 trades, whatever, or 3 trades, we say less is more in trading. So less number of trades you take, it is good for you. Less number of less risk amount you take, good for you. So we recommend 3%, 3 to 4% maximum. 3%, I would say 3%. 3% maximum portfolio risk. So if you have 3 trades running and you have a portfolio risk of 3%, that 3 trades can be 1 in shares, 1 in commodity, 1 in Forex. Then you allocate that 3% to 1%, 1%. So that is how you deal with your portfolio risk. You decide what portfolio risk you have, and then you decide on the amount you will be allocating to get the maximum limit of the portfolio risk, so that you should not be undercapitalized. Never be undercapitalized, never be overcapitalized. What does it mean? It means that if you are trading $1 million account, your minimum capitalization should be $10,000. So that is 1%. But if you are following 0.3% or 0.35% as Akshay, so that is not undercapitalized, I believe so. 3,500 should be the minimum, but you must not go to 1,000. We never encourage people to take 0.1% and pass the trade. That is not possible. Take 0.3 to 1% and pass the audition. So that is the difference between portfolio risk and trade risk. Is it okay, Kerry?
Yes, thank you.
Very good. Second question: do you suggest a daily trading session loss limits? Oh wow, that is fantastic. Kerry has asked all the questions which we are extremely strict in our prop trading or in our normal trading also. Doesn't matter whether you are trading company's money or you are trading own money. Doesn't matter. So the second question relates to daily trading session loss. Maximum should be 2%, because we allowed maximum daily drawdown 40,000 in a $1 million. That is 4%. So what does it mean? It means that if you are making 1 cent above 4%, you are out of the game. That means you have to again pay, my dear friend, $6,300. 6,000, because it is not in Australia. We have to say out of stock. When ASIC tells us that okay, we can start, we'll again start. Not a problem. But in Australia, no one can do it. But the problem is, if you are getting 4% down in a day, you are out of the business or the game or the test or the audition or the challenge. So to answer your second question, daily trading session loss should be, I believe, maximum 1.3%, not more than that. Or maximum 1.5%, not more than that. I say 1.3% because if you lose 1.3%, 1.3%, that you have already lost more than 50% what you are allowed to lose maximum, which is 5%, because there is a difference. Maximum loss is 5% allowed, and daily loss is 4% allowed. What is this hell drawdown? Drawdown is nothing but a technical term which is used to calculate your losses. For example, if you are trading $10,000 and you bring that $10,000 to $15,000, and now you are going drawdown, that means you are not making money, and your account is come down to 13,000. So 15,000 minus 13,000 is 2,000, and that 2,000 is 20% of 10,000. That is a humongous amount. So that is the drawdown. So we must not allow any day maximum loss as 1.5%. Did I answer your second question?
Yes, you did. Thank you.
Third, thank you. Do you teach any limits, criteria for when to stop trade? Wow, what a question. Brilliant. That is why it is so very important to follow our resources. For example, trade plan, trade journal, and so on thing. So much. It's so much importance to have a trade plan. Everyone, each one of you, I would encourage to write it down in your pen and paper, in English or in Hindi, whatever language you follow, doesn't matter. In your own handwriting, not in computer. In your own handwriting. When we started in 2010, we used to write it down in our own handwriting in trade plan. First 5 things you need to write down. Is trading for you? Are you for trading? Number 1. Number 2. Number 3. What type of person from what type of person am I from risk perspective? Am I a risk aggressive person, or a risk balanced person, or a risk aversive person? What type of person am I from patience perspective? Am I impatient person, or am I having patience of an angel? So that is everything should be written down in trade plan and followed in trade journal. You can do all the mistakes till your demo trading, but you must not repeat those mistakes in your original live trading. In your live trading, yeah, you must not do that. You must not. So all these things you must write. What Kerry, I'm so thankful to Kerry. She has asked this question. Do you teach any limit? Of course we do, and that is what we say. So if you are out of the game, if you lose 10%, for example, let's get stuck on this. We used to provide 5%, but now other companies like FTMO, they are providing 10%. So let's increase this to 10%. So if we are allowed to make maximum loss of 10%, it will be easier for us to understand. Then I would believe, don't do anything if you are hitting 2.5%. If you are hitting 2.5%, don't do anything. I think that was discussed in a very nice way in our rule of 2. I believe. Also, give me 30 seconds. We have a rule of 2, which in basics of trading, I believe. And that slide will tell you to answer this question. So till it comes, I'll try to answer this question. If you are losing 2.5%, don't bother. Just trade. 2.5% is fantastic, not a problem. It's easily recoverable. In one trade, you can recover 2.5%. In one trade, you can recover 2.5%. So that's not a problem. So 2.5% you can recover. So if you are losing 2.5%, then recession, my dear friend, coming. All right. So where is that 2%? I forgot. No, I forgot anyway. No, so anyway, rule of 2. Anyway, so I say 2.5%. Don't bother. 2.5%. Just do whatever you're doing. Just do whatever you're doing. Whatever you are doing. But if you are going up to 5% or even less than that, 4%, I would believe 3%. Then you start. Everything is written here. I'm not getting the page here. So for example, let's go to 3.5%. If we are going to 3.5% loss, because that can happen, obviously that can happen, then you go back to your journal. and see why you are losing. Why you are losing? Because there is a column here to write down what is the reason you are getting out. What are the reasons you are getting out? That is a column we give. That is an automatic journal, semi-automatic, where you need to write it down. What are the reasons you are getting out? So if you are making loss here, that means what are you doing wrong? You need to start analyze. So 2.5%, don't worry. 3.5% loss. Go and see your journal. Go and see your journal and try to not to do that mistakes, because when our amygdala is hijacked, we don't know what the heck we are doing. Then 5%, if you're losing 5%, you are still down. You are still safe because they are allowing 10% now. If you go to 5%, then possibly reduce the position size. So for example, if you are taking 1% risk, then reduce it to 0.3%. But if you are taking 0.36% risk in a trade, reduce it to 0.1%, 0.12%. Reduce the risk if you are reaching 0.5%. But if you are still not improving and going to 6%, then possibly stop trading and then go back. Either you take a rest for 15 days because there is no time limit to pass. Either you go take rest for 15 minutes, allow yourself to be in sync with yourself, your body, mind, heart, soul, and spirit, or you need to be in sync with the market. Yeah, both the things are important. You need to be synced with your financial situation, whether you need stability or growth or diversification or contribution or sustainability or whatever it is. You need to go back and analyze in deep. That is where Kerry comes in picture. She can help you. What is the problem here? What is the problem here? Why it is 6%? Why my journal, which was 5% up, now it is down 6%? We must stop trading and go back and do a deep thought. We should stop trading and possibly go back to even demo trading and get back that confidence Yes, get back that confidence. Yes, I'm again ready. Now I'll go back. Go back. Go back. So that is also possible. So yeah. So do I answer your question?
It did part of it. I'm also looking at just a standard everyday trading, or like a session of trading. Like, when do you just sort of go, okay, my day's done? Otherwise, you have that whole, I'm just going to do one more, and you actually forget to protect those profits that you've already made, or your earned capital. So, is there anything that I've just got this idea in my head that I'm trying to develop, and so yeah, is there a thing that you up until now sort of suggested to people? Okay, well, this is when you say, okay, end of the day, you're done, you do this, no more trades, more from that burnout, physical, psychological sort of side of things as well.
Excellent, fantastic. Yeah. So the rule says, I got that. Yeah. So let me first explain this one, which is in Forex Beginners Module 1, Unit 1. Lose versus winning. So if you lose 5%, supposing you started with $100,000, you lost 5%, which is a humongous amount, that your account come down to 95,000. So you have to make 5.3% on that 95% to make it to 5%. That is why we do not recommend that. So coming back to Kerry's question, no, Kerry, it does not work that way, because we generally take most of, unless we are doing intraday trading, like Akshay is doing, unless we do intraday trading, our daily loss or hour by hour or 4 hour by 4 hour, whatever it is, first of all, we do not see any chart every minute or every day, or sorry, every hour or every 4 hour. We only see at the end of the day, that is the next day, at again 9 o'clock or 10 o'clock or 11 o'clock, depending on daylight saving. So within the day, what is happening, we are not bothered. So at the end of the day, if our journal is showing 2.5% loss, then we would not do anything. But if our trading account is showing us 3% loss, then you possibly start going to journal and analyze what is happening, what is happening, what is happening. And if it is going to 5%, then possibly you'll go stop and then take a break. And if it is going to 6%, then we go to demo trading. But within a day, we are not doing anything, Kerry, because we have not taken a portfolio risk more than 3%.
Yep. Yeah. No, so I
You
just,
understand?
there's a
Yeah.
lot of people that I talk to have that, you know, not knowing when is enough. Okay, I'm done today, or I'm done with this. I just need to take a break. And it's, yeah, sort of just trying to figure out how people identify that themselves psychologically and emotionally, physically, that sort of thing.
Yeah, absolutely. So we recommend up to 5%, up to 2.5%, you don't do anything. 3% you go back to journal, and 5% you take a break, or 6% you completely shut down your account and then go back to demo and then do it. Start afresh. Next question: how do you suggest people work out position size? It is plain and simple. Our position size calculator will give you a position size. Our position size calculator will automatically give you a position size, which was explained in a chapter which I showed you before, how to calculate the position size. So that question, this question is answered. And then, do you suggest a formula for moving stops to protect profit? No. No. A strong no. In our 16 years of experience, we have never developed a kind of understanding that we will be trailing the stop loss. We have never done that. Trailing a stop loss can be a losing thing. Trailing a stop loss can be a losing thing, because more and more retail. Why? The answer is very simple. More and more retail traders coming into play. More and more retail traders coming into action. More and more retail traders are coming into action. When we started, the number of retail traders was only 7% worldwide. Now it has gone to 15, 16%, or even 20%. Yeah, more and more retail traders are coming. Retail means they don't know, they are not trained enough. Then what will happen? The more and more retail traders come, the more and more traps will be built by the professionals, so that the retail traders are getting out. Because of the very simple question: to go long, you need to have sell orders, because the sell orders and the buy orders has to match to go to make a tick, TICK. So if the professionals has to push this price, they have to bring the price down. They have to bring this price down and get the stop order, which are the sell orders from the amateurs, and then their buy orders will be executed. That is how the market dynamics and the structure is. So that is why we do not recommend trailing stop loss. If you trail a stop loss crazy, if you do a trailing stop loss crazy, then possibly supposing you are trailing the stop loss here or here, you'll be out here. Supposing you are trailing the stop loss here or here, you'll be out here. Supposing you're trailing the stop loss to protect your, you'll be out there. Every now and then you'll be out. You'll be out. Supposing you have taken a nice trade here, and we say hang on to your profit. And this we have been proving for last 16 years. How to hang on to our profits. So when people are going, and in the last couple of months, from just to show, reiterate what we are doing from June and September. You can go to June, and profitable trading and consistency trading and fundamental versus technical, how big profit September and October and November, and again in November, and again in November, and again in December. If you continue to see these blogs, right, posting here on the resources and trading blog, you will see that our main job is to maximize the profit. That would never happen. If we keep on trail the stop loss. Keep on trail the stop loss. And if you are trailing the stop loss, it is impossible for you to have this run, because you are out already here. Then supposing you are hanging on to the trade from here to here, which is possible, you are supposed to get 7%, you only got 2%. That is why, to answer your question, we never ever allow drop. But instead, what do we do to protect? I think that is the second question. I believe so. This is the last question. After that, I'll hand it over to Marty. Do you suggest a formula to allocate profits back to trading so people can protect? Yes, this is what we definitely do. This is what we definitely do in the terms of we have 3 profit targets. We have 3 profit targets. We do not believe in our multiple that I always trade 3:1 or 10:1. That is a nonsense thing, because people, no one knows the right hand side. Who knew at this point? Who knew that at this point the next bar will be this? No one. If someone is saying that I know, he or she is lying. He is lying. So what do we suggest? We suggest, okay, supposing you have gone long from here according to our strategy. Supposing our strategy is telling you to go long from here, again from here, again from here, again from here. Supposing again from here, our strategy is going to tell you long from here and 3-4 times, or short maybe 5 times. Then we encourage people to have 3 targets. So what are those 3 targets? What are those 3 targets? You can, supposing you are going from long from here, you can trade. You can target according to our pivot point rules, or according to our demand and supply rules. So that means take one. Supposing you have taken 3 standard lot. Supposing you have taken 3 standard lots. So close one standard lot when you see the first resistance. So when you are here, my dear friend, that's a brilliant question. When you are here, don't possibly target this one. No, don't possibly target here. Possibly first target should be, supposing you are going long, supposing a stop loss is here 160 points. Your first target cannot be this one, or cannot be, because they are less than 1:1. Your first target should be minimum this one. Supposing your first target is the minimum this one and the minimum this one. Those of you who are following P star, T star, all those things, peak star or swing high star, that way it can be done. Or we encourage people to take according to pivot, or first target should be the next one, next resistance. So first target should be the next resistance, which is this one, 625 points in this case. So you have taken a risk of 140 pips, and your first target is here. So out of the 3 standard lot, you close 1 standard lot here, and then wait for to see whether a rule of 4 is happening, whether the price is going down or not. If not, nothing has happened here. If not, you get out, you close here 1, and you are running 2 standard lot. Then you target the second one. Don't get panic here, because we have the big bar rule. All those rules we are here. Big bar. This is a big bar rule. This is a big bar rule. All those rules we are having. It is impossible to discuss everything in a class. Then second target should be here. Second target should be here. Yeah. So you get out yearly minus 30 pips. You get out yearly minus, and then you still have 1 standard lot to maximize profit. And then you are laughing at this rule. Oh my God, this is a good run, mate. This is a good run. So did I answer all your questions, Kerry?
Yes, thank you.
Fantastic, brilliant. Any other question? Go.
Sorry, I just also posted in the chat, I don't know if I did it correctly, a question that's also related to stop losses.
Okay.
I wonder if you can have a look at that, please.
Oh, sorry for that. Let me go to chat. Yeah, Kim is writing. Anil has asked, is there any significance of flag height in the bearish flag example? No, there is no significance, Aril. Kerry is asking, hypothesis on stop loss replacement. Our platform just provides an unguaranteed stop loss. Some platforms all allow for a stop loss on close, which means wild intraday swings do not trigger the stop loss. It can never happen, because we do not follow the stop loss according to intraday. We do it as per our end of day. So what is your understanding or thoughts on this? Yeah, plain and simple. Don't mind the intraday. Don't mind the intraday. Don't mind the intraday. So for example, this fellow, in intraday it has moved 363 points. Don't mind this intraday move. So when supposing you have gone long here, your stop loss is here, you are still surviving. You're still surviving because your stop loss is here and price has come to here. So what? We used to say, I don't know whether you remember or not, we always say to well, of course we don't do challenge the market. We can never ever, no one can never challenge the market, but we always say, come and hit me. come and hit me. So what does it mean? We put a stop, we enter here, our stop loss is here, for example, according to our rule, and not exactly here, but anyway, supposing our stop loss is here, we say, okay, come and hit me, come and hit me, come and hit me, and possibly let's see what happened. And market came here and did not hit me, did not hit me, did not hit me. So when we are trading here, we say market come and hit me. It cannot. 80% of the time it cannot, but 20% of the time it can definitely hit. So did I answer your question, Kim?
No, Partha, but I was referring to the Google trade that was a sample setup on the 18th of March.
Google.
Now, I may have stuffed up how I placed my stop loss, but I believe that there was an intraday swing that triggered the end of day stop loss.
Possible. Stop loss is possible in 20% of the time, 100%. Yeah, that is also possible. So Google, what date?
Was around the 18th of March.
18th of March.
Okay.
Huh? That's still running, is it?
No,
Or
I
11th of
was
March?
stopped up.
11th of March?
In any event, that might have just been a rogue trade that my alter ego placed.
Wrong trade. My alter ego has placed. Yeah, this is probably a cooking. we call it cooking. Our meta trade is running fantastic well. So yeah, so that's good. Google was last paid on 31st, and there on 18th there was no placed on the Google. No. So all right. So with go.
Maybe it was the 11th.
11th trade. Okay. 11th trade was on short on 162.09. 162.09.
That's okay. I know what I did there.
What
I
did
just
you
went
do?
long.
Oh God. But that is what we say. S means short, but we are human. We can do mistake. We can go long as well.
It was a $170 investment in my learning.
That's that's all right. Okay, thank you very much for your time, and then I will and thank you for your brilliant questions. And I request Marty to take over. Marty, please. Thank you.
Thanks, Partha.
Thank you.
Hello, everyone. How are we today?
Good. Thanks, Marty.
Doing good. Okay, tell me all about it.
You need to share your screen.
I'm sharing. It's coming. So I believe that's the right screen. Okay, is there any questions today? Can we see my screen?
Yes. Your oil trade was fantastic, Marty. Brilliant.
I like the copper one better.
Copper? Yeah. Copper also did good. Very good. Yeah. Go for it. Copper and oil. But anyone can ask any question to Marty. Don't worry.
Copper and oil. So copper was pretty important. So down here, observe the historical chart to understand why. So me and Partha trade very differently, but our end result still comes out pretty similar. Okay, so I don't want to confuse you guys with what Partha teaches you on that. This is just a perspective from my end. It's not meant to confuse or anything like that. But historically, this is copper. Okay, so this is all the history I can find. I've always got to find as much history as possible to understand where you are in the cycle of whatever instrument you're trading. Okay, so we have a 1, 2, 3, 4, 5. This is 1, 2, 1, 2, 3, 4, 5. That's 3 and 4. 1, 2, 3, 4, 5. In this last little wave, we have 1, 2, 3, 4, 5. So this is likely the end of a 45-year-old cycle. Okay. And we know copper does not do well with what we're always talking about on our deep analysis channel about an economic slowdown. And not only that, we got lucky with Trump placing a tariff on all metal imports and a blanket tariff on copper, which helped to really drive that one home. If I bring it up here, so it's a little early there, but this is our 5. Forget that. This is a bad example. Caught me off guard. But we have 1, 2, 3, 4, and a 5. Okay, so 1, 2, 3, 4, 5 was our 3. This was our 4. And this is our 5th wave up here. Okay, we posted the chart on our Elliott wave channel. So this is our stop loss area. And this is where we take the short, this level here. Oil, similar situation. Okay, so for months and months, we've been saying oil is going to go to at least $60, but probably now it is going to go even lower. Again, economic slowdown, no demand for oil. Plus, Trump wants to lower the price of oil so that everyone can keep the economy going to some extent. Okay, so 1, 2, 3, 4. Waiting for our 5th wave to finish, where it could finish down here. 1, 2. Now we're in our minor 3rd wave. 1, 2, 3, 4, 5. This might be something like this. Okay, 3, where we can see potential small retracement here, where we can go lower again. What's happened with the dollar? Okay, I've noticed Partha had a green arrow here on this guy here. At this point in time, this is still a 1, and this is still a 2. Okay, this is still a 2 until this low here gets broken. Okay, so it's 1, 2, 1, 2, 3, 4, 5. So that'll be our 3. Our 4. And our 5. So does everybody know what kind of gap this one is? Does anyone want to answer that one?
It's exhaustion.
That's the 1. So is this completely finished just yet? Maybe not, but this exhaustion gap and this candlestick combination is looking pretty favorable. But again, I'm still long on this dollar here, long and strong. So we had the Aussie, the US. So we shorted here. This was our entry level here. This is our stop loss. So we just got stopped out by a little bit, and we've come down for our wave 3. Okay, now our wave count is not wrong at all. I have to keep close trade levels like this to keep my trades attractive for people wanting signals. So what we can see for the wave count here, 3, 4, 5. So tariffs or no tariffs, whatever news you want to call it, the patterns don't change. Still have an A, still have a B, we still have a C. Okay, so we have this candle here is higher than this candle here. Okay. So it's what we call a truncation. That's a 2. And this is a larger A. Okay, B. And a C. Okay, so when we go back in time, we have been saying this is a bigger fall for quite some time, and we need to be careful of this level here. Okay, so for a few months now, we've been saying a critical support, this level here. We have finally broken through it. And now this is our last wave down in red, okay, to complete a minor wave all the way down, impulsive wave. We drew this trend line here, going back to our first question this afternoon. Why I kept it there is a trend line can be what they call a polar shift, I think they call it that, where a support can turn into resistance. So I kept it there.
Polarity change.
Polarity change, that's the one. So I do keep them there for that reason at times, but like Partha, I try to keep my charts as clean as possible. Bitcoin, this is a really interesting one here. 1, 2, 3, 4, 5. Okay, we got this strong red one here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 to make sure this is complete. We've come down. We haven't broken the top of this bar here. This is one of Partha's favorite candlestick or bar patterns. We're not breaking 1 or 2. We're not breaking 1 or 2. We're not breaking 1 or 2. We can continue down. The possibility of that is likely on my end. What have I posted here? Okay, so we've completed that wave cycle up in blue. So the Senate Banking Committee approves the Genius Act for crypto stablecoins. Okay. So what this means is the Genius Act, the major banks are allowed to trade and exchange these stablecoins, meaning there's regulatory approval involved with that. So the peer-to-peer transaction process is getting more and more regulated through this Genius Act. And it's all the beginning of these CBDC formulation, where they will give you a programmed digital asset they can control and censor what you spend your digital assets on. Okay, so that's all coming. But this started last month, I believe. Again, you got this White House fact sheet about what they are doing and what they are not doing with their strategic Bitcoin reserve. So the peer-to-peer transaction is slowly falling apart. There's regulation happening pretty effectively there. So I don't see a lot of strong reasons to be buying Bitcoin at the moment. Then we have our friend Michael Saylor, I think his name is, who was running a company, MicroStrategy, started going broke, so changed the name of it to Strategy, and it's looking like he's in a lot more financial trouble. And I know he's been offloading about $700 million worth of his crypto assets recently. He's looking to offload a few more. So I'm pretty happy with looking at shorts on Bitcoin. And we do have that one on at the moment. So that was it here. That's our stop loss. That's our entry here. And here we are. Here we've gone into our entry and we're just treading water going sideways at the moment. Just quickly, what else we got? We got the euro. Again, 1, 2. So I'm happy to say this is a smaller wave 1. Okay, so we're doing our wave 3 down. I'm happy to call this our little black 1. And 2. Okay, because we have that inverse relationship with the dollar index there. So we got stopped out a little bit here. 1, 2, 3, 4, possibly 5 here. This is still our red 2. Until we go above here, then we are wrong. But I'm happy to still be long and strong on the dollar. Pound, we entered this one a little bit early here. That's our 2 there. This is looking pretty strong reversal here. I'm happy to hold long on US dollars and short pounds here. Hong Kong, the Chinese have a economic world of pain at the moment, which is why this was one of our picks to go with shorting the Hang Seng. And the other country which is in really bad shape is the DAX here. So another one which we called, so that was our stop loss. This is our entry here. Is there anything any people want to see in particular?
I think Marty, Kim has asked you a question on the chat. So can you please read the chat and answer his question?
Thanks, Partha.
Not to worry.
A few sessions ago, you showed gold with some projected pullback waves, and one I recall vaguely that you had a pullback wave around 30.50. Saw that play out given last Friday retracement. Last Friday. Oh no. Okay, so last Friday, a few months we've been looking at these targets. Our first target was 2,800 to 2,900. We went through that. The second target was 3,165 to 3,200 was our second target. This guy hit 3,167, so 3,167 is pretty close to 3,165. We were looking at a pullback from last scenarios. That would have been this guy here, around 30.50, I believe he was talking about. Is this the one, Kim, or is this the one here?
So Marty, I'm a bit vague on the 350, so it might have been your projected low coming down to the bottom of that channel.
So maybe this guy here.
Yeah, or the next low above.
This one here.
Yeah.
So this would have been the last time we were speaking. I think I have it still drawn up here. Okay. So this was it here when we've last talked.
Yeah.
And I was believing we were going to have a small retracement. I drew down something like this. We were going to continue higher. So we didn't get as much of a retracement as I believed, but we still ended up going higher. Okay. These channels are pretty reliable. So when they touch 4 times, 1, 2, 3, 4, this can signal the end of this wave here. Okay. Now all this, it's a bad idea. So this might be just a 1, a 2. This whole section here can be just a 3, where we can have another slight pullback. But I do think this guy is going to go higher again. If we look at history, that is a 3. 1, 2, 3. It's pretty strong, Kim.
Yeah, I just have stops just at the 1V mark, and I was just getting curious as to how many nights to stay awake or go to sleep.
I don't know. To me, this is some kind of temporary top. So I would not be surprised if we start seeing some sort of correction. Will it be a deep one? I don't think it would be very deep at this point in time. But to me, it's still a temporary top.
Yeah.
What else can we look at? So we have the NASDAQ. So we have a 3, 5 up here. Many moons ago, we were mentioning about NVIDIA being heavily weighted on all these indices. So we've done a wave count on NVIDIA. Since these indices are so heavily weighted on it, it had the potential there to drive all these indices along with it, which it seems to have done here. If we go back and have a look. So that's NVIDIA now. This was our wave count back then. So this is where we're sort of getting interested in NVIDIA around here. And anyway, I think that's about it for today, Partha. We had the Nikkei as well. We had A and B. The last masterclass, this is where we were showing the A and B formation here. This is how we are looking now. Potentially down to 20,500 down there. Okay. Any questions?
Marty, what do you think about AUD pairs like Euro AUD?
It's not something that I follow.
Okay.
But I would think off the top of my head, I think the euro is stronger than the Aussie at the moment.
Yeah, it's keep going that side. I don't know. I'm going to stop.
All right. Yeah, I think Australia's in a pretty weak spot at the moment, so the Aussie would be pretty weak across the board, I would be saying.
Yeah.
Yeah. What is that one? And the Aussie's a bit stronger here. Yep. Anyway, who was that?
No, I was asking, are you searching anything, Marty? I
Searching.
think interest rate you were searching, is it?
Yeah, just as I see how strong these guys are here. So the pound's pretty strong against the Aussie, so you're probably stronger pound, a weaker euro against the Aussie, a stronger dollar against the Aussie, stronger dollar against the euro, and just a basic quick look. Yeah,
So I have a question, which Ben.
Yep.
In just looking at those interest rates there, where do we sit from a trading perspective in terms of the way the course is structured on something like a carry trade?
Okay, so you borrow in the lower interest rate, and you hold the trade overnight on the higher interest rate, meaning that you borrow cheaply, to get that interest rate carry overnight, to get that interest rate difference.
So we're at 4.1 in Australia, 0.5 in Japan. There's a 3% overnight interest gain.
Yes.
That 3.5% is calculated over the year, Kim.
So there you go.
Yeah, I understand that, and I appreciate you kind of reframing that. So you wouldn't want to hold a carry trade for very long, though. Or given the slow rate of change with interest rates, you could.
Yeah, so that's what all these big hedge funds and that do. They hold these carry trades for as long as possible, just to earn the interest off that trade just by holding a currency.
Yeah.
But in CFD, thanks, Kerry. But in CFD, to my knowledge, you'd be eventually beneficial in a carry trade if the high interest rate against the low interest rate currency pair is going up. For example, if you are long on Aussie yen, you are not only getting the benefit of the swap, SWAP swap, that is the interest rate differential between the currency pairs, but also you are getting benefited from the movement of the Aussie against the dollar, against the yen in the upside. So you are adding up your benefits. But if you are long on Aussie yen, AUD JPY, but the AUD JPY chart itself is going down, then you are at horrible position. You are only making $2 from the interest rate, but losing $5 from the down movement. So that's not a prudent move.
So just for clarification, then what my new understanding is based on what you've just said is that inherent in any currency trade on, say, the Aussie yen, you would automatically benefit from the carry trade interest differential.
Yeah, that can be less than the loss you are making on the original trade.
Yeah. So assuming it's going up and you're making money on the currency,
then you are laughing.
But I guess for me it is really just an out loud acknowledgement that in essence a carry trade is somewhat built into your currency trade.
Yeah, carry trade was very popular. Marty can add, while when the interest rate in Australia was 17%, 18% long back. Yeah, but now, as Marty said, I think the mutual fund or the hedge fund managers should be doing it.
Yeah, they do it a lot different to how we would do it. They have the access to forward swap rates and forward contracts and things like that. So this is just a very basic, quick look at some sort of strength of what could possibly be happening at pairs I'm not really following. Just that's all that was about.
Fantastic. Any other questions to Marty or to anyone?
Thank you, everyone, and I appreciate your time today.
Thank you so very much, Marty. Really appreciate, and thank you all for wonderful questions asked so far, and every time, anytime. And thank you for your time in a Sunday evening. Thank you all, and have a good trading week and a trading month. Take care. Bye for now.
Bye for now.
Thank you all. Bye.
Bye-bye.